Started. Okay. So what happened to the screen sharing? I had it on and now it's gone. Why is that? Bad news or not? Let's see. There, it's back. Okay, back again. I don't know what happened. All right. Yes, so today reviews. I'll start the trading reviews. So far we have 11 journals. So I'll do the first 5 or 6 and then hand over to Tyler. And then Tony will cover RBIs, GBIs. Okay? So let's start here. Okay, I did not prepare the journals, so I'm seeing them for the first time, just so you're aware. If I make any mistake, then just scream, okay? All right, so. And it's good to see you back, Paula. Thank you for being back with us again. Okay, so first journal here is by Greg. Greg is pointing out that he's using a max loss per trade of $80 here and is trading eBay. He's trading eBay in the middle of the day, okay? And so let's see where so there is a story here, but let's just first look at the trade first, okay? So first thing he says here is shorting one lot on a GBTO on separation, a lower high, tired price, low risk, stop loss event. Wow, okay. Okay, let's take a look at this. First of all, in GBTO, I guess this is your GBTO, Greg? Why is that not a GBTO, really? Why is that not a GBTO? And I'm being picky here for, but I want you to understand what the real concept of a GBTO is and why this is not one of those, if you are strict semantically. Anybody? Nobody? GBTO, okay. The GBTO looks like this. You need a solid green bar, okay? Exactly, Henrik, thank you. A solid green bar, and then you want that taken out by multiple bars here, okay? Maybe even one goes a little up here. Okay, so you need like a minimum of 3 bars here, but the idea of a GBTO is really that a solid green bar is taken out. Because the fact that it's a solid green bar gives you a lot of information. This is like a failure, right? It's a failure to follow through on that bar. And there is a small green bar being taken out here. There is no solid green bar, okay? So that's a totally different kind of information that you're getting here. So if you want to name this event, what would be a proper name for this event? Anybody? A better name. Absolutely. This to me, this is a narrow, an NRB, a narrow bar, reversal bar. Okay. Okay. So not extremely important. Okay, but important from the concept of what information is behind this move here. What's going on, right? Okay. All right. So there is one thing that is like missing here, and that is the location, right? So you're going, actually, you are in a location here above a rising MA20 and above an MA200, right? So you're going against the position here on a narrow range bar, okay? And you're going to type something, so let's see what you want to say about that. I have some degree of separation. Yeah, well, that's right. Okay, I cannot deny that, but you see your separation is 20 pennies here, right? Would you think that is really separation? I think that is not really, excuse me, that's not really separation here. It's just a few pennies, really. So if you have at least $1 there or so, that would be a totally different story. But this is hardly separation. So what can I say about this? Let's put it this way. This is by no means a checklist trade. Is that clear to everybody? By no means, because you're going against the position on a very weak event. So now we're actually in another territory. We're off the checklist here. So let's look at this trade as a non-checklist trade. And what is it really here? Look at this move up here. Look at this move up here. So what? I mean this move up here, right? What is the predominant color in this move up here? Absolutely. There is only green solid bars there. I don't see a single red solid bar there. Everything is green solid. So everything here looks like it's going to the upside, right? So you're really going against power here. Let me also draw this in here. You see this green bar here, right? Support. Okay, so you're shorting actually a narrow range bar here against support, against a powerful move up above a rising MA20, which is rising above the MA200 on what you call separation, which is actually 20 cents. All right. So it worked. Miraculously, it worked. It worked. But I need to point out these things to you that actually you have very little, if not nothing, again, in your favor here. There's really nothing in your favor here. Unless maybe you are multiple time frame trading and maybe you know something, you see something on a higher time frame that actually lured you into this trade. I cannot really see why you would short here. To the contrary, what I would be anticipating here, what I would be looking for is really this thing to go here to the MA20 and then take off. That is the most logical thing, especially because you also have support here, right? There's a lot of things coming together here. Now, somehow, in this case, the market decided to do the other thing here, okay? This here is a short. Why? Because now the situation is totally changing. Look, here you have like one green bar and it's taken out. No big deal. So far, this is just a pullback, right? It's a pullback against a push up here. This is actually, you have two strong pushes up here. This just looks like a pullback at this point. Wouldn't you agree? So at this point, you have one green bar taken out. That's okay for a pullback, no problem. Now you have another green bar taken out. I just count these two bars as one, right? Don't see a problem with that. But now something happens here. Look at this bar here. This bar is a different story because this bar goes up here and then fails, leaves this tail behind here, and at the same time takes out 2 times green here, and also undoes this support here. See, support is also gone now. So this is a short. I mean, a potential short, depending again on your level of development, because you're still going against the MA20 and the MA200. So you have to ask yourself, am I ready to do that? Do I have enough experience to ignore these important guidelines in my trading, overrule them and say, yeah, okay, I know I'm going against the MA20. I know I'm going against the MA200. I know this is, in principle, this is a long location, but this time it's really different. I know what I'm doing. I'm overruling all of this. See? So I'm going on about this because I want to make it very clear to you guys that there is not always one single answer to any trade, right? It really depends on your state of development. So to Oliver and to me and probably to Tyler and Tony, this is a short, okay? But this, Oliver would never short here unless he sees something somewhere that we don't see here in this chart, okay? For the reasons I have indicated. Okay, so short here actually, where is your cover? Step 2? No. Oh, you're not covering. I see. You're adding here. Okay. All right. You're adding here. Wow. So you have 30 cents profit here. you're also allowing it to break through the MA200. And at this point, of course, now this is a totally different chart. Totally different. We have a big red wall here, okay? Plus, we broke through the MA200, so we have a resistance zone here, right? So now it's a totally different story, and you're adding here below the green bar. Perfect. That's good. So the original entry I cannot really agree to. This one I could agree to, and this add is, I think, is beautiful. Okay, but now, mind you, now we're also in checklist territory because now we have this push to the downside here, right? So now we're actually bouncing up, pulling back into the shadow of this red bar here, combined with the resistance, overhead resistance on the MA200 here. So now we're in checklist territory again. Now it's a different story. Add here. Okay, your stop is now here. Okay, fine. And then you actually add again here. Very nice, because you're adding again here. I think that's a great thing to do. The only thing is now, how much is your risk at this point? So let's say our stop is at 95 here, and you're adding roughly here twice, okay? So you have 25 cents, like 50 cents here, okay? And a little profit on this one. So, okay, you're still like, you're still in good risk territory here. Your risk is like 40, 50 cents through the trade if you get stopped out here, okay? You say, I added too far from the 20, is that okay? No, you didn't really add too far from the 20. You don't have to be near to the 20. That's not a rule, really. What's more important is the violence here of this mini crash, right? Look, it's still a mini crash because, look, we're talking 95 to 65, 30 cents, right? This looks very big because there's very little volatility in the stock at this moment. It's hardly moving. So this looks like a huge drop. But in fact, it's only 30 cents. So it's not it's not as impressive as it may look, okay? But after violence like this, you can add immediately below any green bar that's being taken out. So I don't see anything wrong with this add. Perfectly fine, okay? Now after it like pulls back here and then takes out this whole range here, this is it. What is the name of this bar here? What do we call this bar, guys? This red bar here where he adds. What do we call this bar? Besides being an elephant, of course. Yes, it's definitely clearing. It's even igniting because it changes what happened before. See that? We have like this sideways stuff here, and it's actually taking off. So it's igniting and clearing, both, right? Exactly, Henrik. So a great add here, okay? Now, what are you looking for after you add here? What are you looking for? Add here, what are you looking for? Oh, sorry, you didn't understand the question. So, okay, you add here, and now I'm thinking about the checklist, right? What is our target here? What are we after here? Because now we have a checklist trade, right? Look, we have this big push to the downside, we have a bounce right back up, and we're looking for what? The new low, the whale, right? This is whale trading. We're looking for a whale here. There's your whale. Okay? So perfect. You have this big bar here. It actually makes the new low, okay? And you didn't take any profits here, which I understand, because after a bar like this, you expect some follow through to the downside, right? So you didn't take any profits here. Okay, now what happens is it bounces right back up here. What could you have done here? Could have closed part of the trade here because it fails to keep the new low. It makes the new low, but it fails to keep it, right? It cannot keep the new low. So, so closing, you have 3 lots short at this point, right? Closing at least 1 lot here, I think, is a good thing to do. So basically, your add here is being undone by closing here again. Okay, and then you close the trade here. Okay, I guess that implies a stop adjustment, but I don't see it in the chart. Don't see it in the chart. Or is this your stop adjustment? 2, 3. Would expect you to bring down your stop first here, and then maybe later you can use a big bar stop here, because I agree, if this big bar fails, the trade is in trouble. Okay. Oh, you explained it in 3. Okay, let's see. Bear elephant bar, clearing, igniting. Move the stop loss to the top of the bar. Okay. Given the bearishness of the setup, if the bear elephant fails to ignite, I don't want to be in the trade. Yeah, I can agree with that, because this thing, if this thing fails, there's probably something wrong with the trade, right? And so it's okay to get out of the trade here. You get your new low, you have your whale complete. There it is. Okay, you have it now. If it loses that and takes out this red bar, this trade is in trouble. Does everybody see that? Okay. Right. Okay, then we go on. The impossible happened. Well, impossible. Anything is possible in the market, right? So the improbable happened, you can say. But impossible, no. Okay, understood that the game is probably rigged. That I don't understand that statement. You're saying something about an algo here and everything, but what do you mean the game is rigged? The market is just not doing what it usually does. And this is also why I am commenting to your word impossible, because if you think that is impossible what happened, then I can see that you're looking for an explanation, and you say that somebody is manipulating the market and is trying to mess with you, right? But why do you need that? Yeah, okay, but why do you need a story like that? I mean, this happens. It's a game of probabilities, right? This bar here is being taken out, okay? How often would that happen in a situation like this? Just give me a number between 1 and 10. How often would that happen? All the time? No, not all the time. That would be 10. I would say it happens 2 in every 10 times, maybe. Like 20% of the cases. Yeah, I'll say I agree with that. 2 out of 10 times, it just doesn't work. It bounces up. So somehow more buying shows up here, and it pushes the price right back up, and it takes you out of the trade. But the other 8 times it works. It's a game of odds. It's a numbers game. It is a game of probabilities. So probability means that 8 out of 10 times it will work, but probability also means that 2 out of 10 times it will not work. This is just one of those 2 out of 10 times. So there's no need to look for explanations like rigged games or algos playing against you. There's no need to do that. It's just a stop out, nothing else. Okay? I think you should be very careful to dig too deep and look for all kinds of explanations of, especially of markets conspiring against you. You know, it's just a game of odds. When you get into the trade, you already know that there is a chance that you're going to be stopped out. So if you're being stopped out, then why are you looking for somebody who is messing with you? You see what I mean? It's just a part of the odds. There is no guarantees at all. Okay, so we go on. Now you short again here. The load is floor. Very nice. 2 slots short. I think that's a great short. Algo price level. I wouldn't even think of that. I would just say this is a short because the red takes out the floor here. That is what is important. Okay. This is, you see, this here. There's a very big difference here. There's a very big difference between price breaks floor here, okay, and saying algo price level. What is the difference between those two? Or saying there's an algo messing with me. What is the difference between these two things? Very important difference. Anybody? It's a little tricky question. It's maybe a little difficult to answer, but let me tell you what I'm after. This breaks here, right? This is a fact. No matter who looks at this chart, whatever you have in your mind, you can pull a 5-year-old child from the street and have them take a look at this chart, and they will agree with you that this thing is breaking a level here. Okay? There's no problem with that. However, this is interpretation. This is something totally different. There's no fact here at all. This is interpretation. This is something that is between your ears. This is you dressing up what's going on there. Now that's okay. There is nothing wrong with that as long as you do not let that influence your actions. Okay? Because it's just interpretation. The truth of it is you have no idea what's going on behind the scenes. You don't know. You can't know that. Okay? So the difference between fact, nobody will disagree that this floor broke, or interpretation, something you have in your mind, but somebody else may not have in their minds at all and may not even be a fact at all, unverifiable, is a totally different thing. This is a reason for a trade. This is not a reason for a trade. See the difference between fact and fiction, basically? I'm going overboard with it, I know, but I really want to point that out because I think this is where many traders go wrong. They get all kinds of ideas about what the market is doing and what is going on behind the scenes. And at the end, it's totally unimportant what's going on there. The reason why the market is moving is irrelevant. All that is relevant is what it's doing, the facts, the price levels. So breaking here, short here, great. I see no stop here, but I guess it is. Is this the stop here? It should be here anyway, above. Actually, it should be a max loss per trade stop because you're very close to the MA200 again, right? And look what happens. It bounces up here and it actually gets really close to that MA200 before it actually makes that turn. Goes down, you cover here, okay? And, okay, this is not important. I get it, okay. So I think it's overall, it's good trading, Gregory, except I don't like this entry, although I'm not saying it's wrong. It depends. It's more advanced, and you could maybe do it in a different context. But there is a lot of things against this entry. That's for sure. But this is a short here that I can see. Playing the whale here is perfect. This is just checklist trading here, and this here, the break of the low, is also a great trade. That is also beautiful trading. Okay. So Tyler, we use a time stop, 1 bar break. Yes, I don't know where you would want to put your time stop, Tyler, in the first trade or in the second trade? On both. Oh, okay. Yeah, you can do that. I think you just need a pivot stop here, and then the big bar stop here, which takes you out. I think that to me that is perfect. And here, I think you need a max loss per trade stop until it goes down here. You could adjust it at some point, but that would be my approach. But maybe you see that a little different. That's okay, of course. Yeah. All right. So quickly over this time. So the stock tried to crash, but somebody is preventing the price from dropping. Conspiracy here, right? Two very suspicious things, you see. Miraculous price recovery, there's a lot of interpretation here. And the fact is just that you had this 20% of the cases, you hit one of those 20% of the cases where it doesn't work. That's my take on it, at least. Okay? All right. So next trade then. Trade by Akke on eBay. He's identifying a bull elephant bar, and this is from Friday, right? Okay, so Fabulous 4, bull elephant bar here. Okay, after a neutral bar, right? A neutral bar. What do we do with neutral bars again? Anybody help me there? What do we do with neutral bars? That's right, we ignore them. So we take this bar off the chart. We don't see it. It never happened, right? We totally ignore it. So now this is the first bar of the day, and we have a great bull elephant bar here on a great location. Position plus, that's right. but there's something extra here. Position plus is only like the normal aspect, but we have some amplifier here. What is it? This is not just position plus. There's more to this. Power surge off the MA200. That's right. I think Tony spoke about that already in one of the previous sessions, right? So this is a very strong play. The location, no, let's put it this way. The location here is perfect, right? Not only position plus, but also off the MA200. Wow, juicy, very juicy. Now, Akka is actually anticipating here. You're not here, Akka, right? I don't see you in the room, but sometimes people are in the room and I just can't see them in the list for some reason. So, hey, Andres is showing up here. Hi, Andres. Good to see you here. All right, so Akka is not here. He's anticipating in this bar. Is this an anticipation bar? I don't see him either, Carlos. No. Is this an anticipation bar here? Yes or no? Jose says it's not. Anybody else? Carlos doesn't think it's an anticipation bar either. Anybody else? 3. Andrew says no. We have already 3 here. Anticipation, yes or no? No. Okay, I agree with that, because look, this bar here, this bar at some point here, it is this size, right? We have this bar here. So the question is, when do we anticipate? Well, we anticipate whenever we have an elephant bar plus, right? Is this an elephant bar plus? How do we know it's an elephant bar plus? We know that's an elephant bar plus if the bar is so big that you can take 1/3 off here, and this is still elephant size. So we take 1/3 off here. Is this an elephant bar? No, not in my book. Compared to the bars from yesterday here. You see this bar here is the same size basically. Same size, a little smaller. This is not really an elephant bar here. So this is also not an elephant bar plus. So I think it's better to say that the size of this one is an elephant bar. So long above the high here, confirmation entry. This is not an anticipation entry. Okay? So confirmation entry is what I think is the appropriate thing to do here. 2 lots long. Where is the stop? His stop he's putting at max loss per trade. Why? Because the stop is very close to the MA200, right? And then we need to use a max loss per trade stop that is, let's say, far enough below the MA200. All right. So what is the risk in this trade? He is entering roughly at $60 here, and his max loss per trade is somewhere here. Let's say it's at 60. That means there is 40 pennies risk to this trade, 2 lots, $80 risk to this trade initially, okay? His max loss per trade is $100. So that's okay. He's risking $80 on this trade, which is less than the $100 that he promised himself he would lose on any given trade as a max, okay? So we're doing okay here. Now he's adding on a hidden RBI here. Hidden RBI. Everybody see it? It's here, right? We'll go down here. This is red. And then green comes and takes that out. So we have here a hidden RBI. And he's adding to the trade. Beautiful signal. Beautiful. Now the only problem is, what is this doing to his risk? Well, that's a problem because we already had a risk of $80 in this trade. Okay. Now he's adding roughly at 15 here. So with a stop here, roughly at 60, we're adding $55 to risk to this trade. So now we have $135 risk in this trade. And that means that now he is actually, with his stop unaltered, he is actually going well above his $100 risk here. Okay? So now we have a problem here. Perhaps he could have put an event stop here on the ad, a separate stop. That's just a suggestion. Anyway, he's not here, so we cannot discuss that. It doesn't matter. Just wanted to point that out. So first, step 1 and 2 are in. Now we're going to step 3. He's taking some profits here. Is this a good profit take location? Yeah, just answer that, guys. Is this a good profit take location according to the checklist? Yes or no? Good profit take location, yes or no? I see yes, I see yes. 2 yeses already. Anybody else? Michael says yes, yes. Yeah, I think I agree with that. So we have like one push up here, right? If you add here, okay. Sorry, if you enter here, we have like one push up here. We have a second push, maybe a third push. In any case, we also have like more than 30 cents profits here at this point, right? Yes, Carlos says yes as well. I see it. Thank you, Paula. So we have like more than 30 cents, and we have like 2 to 3 pushes here. So I think it's a good profit take here. One lot off. Henrik says 2 pushes after RBI. Yeah, I think you can argue that as well. In that case, you should take profits here. Okay. All right. 1 off. 2 lots still in the trade. Stop still at max loss per trade here, right? Because we're not allowed to move the stop until after the pullback. So pullback here. Is this an orderly pullback? Yes or no? Is this a good pullback or is it a bad pullback? Is this orderly? Yes or no? Great pullback, good pullback, good pullback. Okay, yes, I agree with that. Why? Well, because it respects the 50%. See that? There's your 50%. Here we go. 50% pullback. And there is one red bar here that is a little sizable maybe, but it's not impressive. It's not like really damaging anything here that we had on the way up. So great pullback. And he's adding here above the body. Beautiful location. Very nice. Because the earlier you add here, the lower your risk, right? He could have waited for the high to be taken out, but by adding already here, he actually makes his risk smaller, which is good. Okay. And then this is step number 4. And then he points out, thank you, Ake, thank you, I like this. He points out that at this level, that is when he moved up his stop to the pivot. He's marking that when the market got here, that's when he did it. And that we need to know, right? We need to know when you adjust your stop. Okay, so he added there. He moved the stop there, and then takes another lot off here on the new high. Beautiful, beautiful. Then at 7 here, he says, I'm taking 1 off on the follow through. Beautiful. You have every right to do that. Remember, profit takes are rights. They're not obligations like stop outs. Stop outs you have to take. That is an obligation. A profit take is a right that you earn. And he says, look, at 7, he says, I see a moving average stop here. And he picks the 5 minute here. The 5 bar moving average here, which is very nice because look, it has distance here. It keeps a nice distance to the bars. It's not touching the bars. And then he gets out here below on the second bar break below this bar here. He's done with the trade. So I think this is beautiful trading. I really, really like it. This is pure checklist trading. There's not much to say about it. You could have taken profits a little later here, maybe, yes. And this is not an anticipation bar. That's actually the only thing that I would like to say about that. This is really a confirmation entry to me. But other than that, I think this is very good. Okay, so when you see this recording, those are my comments. Okay, go to the next one here. Next trades by Victoria. Victoria's trading XOM here, and she's not here with us today, unfortunately. Okay, so Victoria is trading XOM. Starts by marking the trap zone here. Okay, takes the high from yesterday's congestion zone, the low from the congestion zone, the MA200, and then sets up the Fabulous 4 here. So we know what she's seeing here, what she's looking at. Okay, Let's see. Identifying an RBTO. Okay. Remember, I just spoke about the GBTO, the green bar takeout. I said I want to see a solid bar there being taken out, or it's not a green bar takeout for me. Same thing for the red bar takeout. I want to see a solid bar. Well, here it is. This is a solid body, right? See that? This is a red bar takeout. That's okay. See, it's not a red bar takeout in position plus, right? Single plus, because we are just above the fabulous 4 here. And decides to take a confirmation entry on this RBTO with an event stop. Okay, now there's a couple of things here we need to talk about, because so first of all, she already marks herself the most important mistake here, and that's this one. That actually there's already an event here with the bottoming tail bar, so she should have gone long here above the bottoming tail bar. There's no need to wait for anything to happen to this red bar. Why? Because you are in a positive location here. You are in position plus. So that means basically that any event you're biased in your long direction, right? Any event that happens is okay. So the bottoming tail bar here is enough to trigger you into the trade. Okay, that would have been the best entry here. So waiting for the red bar takeout to trigger here is actually quite late. If you want to wait for the red bar takeout to trigger, I would definitely take it above the solid body here. There's no need for the tail to be taken out. This is a very solid bar here. The fact that it takes this out here is a lot of damage. This whole move is just done. It's just finished, right? So there's no need to wait and entering later, because all you do is you add to your risk, meaning when you're being stopped out, you lose more, but also if you're not being stopped out, you'll make less of a profit, right? So you're paying twice. You're paying twice. If you're being stopped out, you pay more, a higher price, and if you get to your profit take, you actually earn less money, okay? And that will be a problem to keep you on the positive side of trading here, okay? All right, there's another thing here, a stop loss here below the red bar. If whatever you do, I think the stop loss should be here. Definitely. It should be where the low is of this move. Okay. And of course, if you take the bottoming tail bar, then there's no question that this is the proper event stop here. But you cannot muffle your stop loss here, I think, and just ignore the fact that the market dipped here, because it can dip back. Look, that's what it did here, right? Back and up. It even dipped in here as well, below that stop loss. See? So this stop loss here makes absolutely no sense to me. I don't see any reason to put a stop there. Stop should just be here. Okay? All right, we're in this trade, 2 lots. And she says, I missed taking profits because I have 3 pushes after the correct entry. Oh yes, very good observation. Here was your correct entry. So you have 1 push here, 2 push, 3. I think you have even maybe you even have 4 pushes here at this point, because this bar is so big, you can actually cut it in 2. Okay, so definitely a profit take here, definitely off the bottoming tail bar. But I think even if you enter the trade here and even here, you still have to take profits here. Look at this move; these bars are getting bigger and bigger. Also, you have to do something there. So yes, a missed profit take under any circumstances, I think. Adding here on the hidden RBI, very good. It's too late. It's too lade. Because why is it too late? Why is it actually too late here? Yeah, that's a good question. Can anybody tell me why that ad is too late? What is the main reason for that ad being too late? Hendrik says too far from the MA20. No. Jose says whale complete. No, no whale here. Already moved 3 push. Nope. MA8. No. None of those. Nada. No pullback yet. No. Exhaustion bar. Yes, that's getting closer. It's not exactly what I'm trying to point out here, Jose, but it's the closest one so far. The point is that, look, you already have 5 green bars here, and they're getting bigger and bigger here. Okay. How many more green bars do you expect here? before we get a pullback. You must be close to a pullback here, probably. That is the main reason. The MA20 is not a reason. Why is the MA20 not a reason, the distance to the MA20? Why is that unimportant here at this point? It doesn't matter at all. Why is that? Yep, that's right, Gregory. This is a trade at the open. And at the open, the MA20 is not relevant, because what is the MA20 actually calculating here? It is predominantly calculating bars from yesterday and a few bars from this morning. Okay, oh, sorry, that is wrong. And a few bars from today here. But predominantly, this is what it's telling you. Something from like 20 hours ago. Okay, so it will take a while before the MA20 is actually getting any meaning here. Let's say in this area roughly. There we can start to talk about the MA20, but at this point it's completely irrelevant. It is just nonsense. It is just nonsense what's in here. Okay, so what you should look at the open here when you're judging whether this is a proper ad or not is really the bars that were before it. Okay, that is the only thing that counts. The MA20 is not important here. All right, take note of that. If you may want to write that down, because it's just too easy, you know, to just look at an indicator instead of looking at the charts, at the bars, what they're really telling you, because that's price information. That's really what it's all about. The indicator is just a derivative. It's derived from the information in the price. And then if it's meaningless, like in this case, well, you're actually taking a decision based on a totally wrong reason. Okay? Okay, so coming back here, missed a pullback ad. Yeah, I'm not so sure about that. Look, the point is this a pullback? That is actually the question. Is this a pullback? Who thinks this is a pullback? Yes, or do you think this is a pullback? No. Not a pullback. Okay, well, we all seem to agree on that. The problem is, look, this is the high, really. So you have like 1-2 bars maybe. That is very little for a pullback. Normally, under normal circumstances, you want to see a minimum of 3 bars. Now, not necessarily. It's not like there is a law there that says it has to be 3 bars. But it depends a little bit on the situation. But in this case, 2 bars here, nah, that's not really a pullback. So I don't really see an ad here either. There's no reason for that, okay? And for the same reason, there is not really any new high here to take a profit. Besides, if you would be taking profits here, Victoria, you would be taking profits after a red bar. See that? And we don't take profits after a red bar. We take profits on the bar that is following, the follow-through bar, because we always try to get a couple of pennies more. That is the whole idea here, right? So this is not really a profit take either. Okay, so now it's pulling back. Like, this is different. You see, now at some point here you say, okay, now we have a pullback. Now it is pulling back. All right. Meanwhile, our stop is still here, and it should be, because we don't really have a pullback. There is your ad. See, here is the ad, because now we have a pullback. We have many more than 3 bars. You can also see the controlled character of it, how it's drifting back, right? It's drifting back. Where are we here? Well, we are about 50% here. See that? 50% again. So now we're adding here at 50% against an MA20. Is this MA20 valid? Does it mean anything at that point? Absolutely. Yes, now it has meaning. Here it didn't have any meaning, but now it has meaning, because now we have like 20 bars in here. This MA20 here is calculating the average over the last 20 bars, meaning the 20 bars from this morning. So now it has meaning. So this is actually a great ad location, because we have a couple of things coinciding here. We have our rising MA20 and we have our 50% here. See? 2 things coinciding here. And then the market, and also look at the controlled character of the pullback here. And now the market is taking out red here. This is an ad on the pullback. Okay? Now, this goes up here And now you can say, is this enough, yes or no, to move the stop up? Is this, because we're waiting for 70-80%, right? Before we move our stop up. Why is that again? Why do we wait so long to move the stop? Why do we want to see at least 70-80% of this pullback to be undone? Why was that again? Excellent, Andrew, because we are always have to be aware that that could be a double dip. There it is. See it? There's your double dip. So if you move your stop up here, she says, I should have adjusted the stop here. Nope, you should not have adjusted the stop there because you still have only one leg here in your double dip. You have in your pullback. So, and we don't really have here like a 70-80% move up. If you see follow through to this green bar, so suppose that this would have happened here. Look, suppose this would have happened here. A little more green here. Now is a different story. Now you have a different story because now you see this powerful green bar here and it has follow through and it's roughly in the 70-80% area. Now you adjust your stop to here. Okay, but that never happened. Look, this bar, this big bar here, never got any follow through. We just turn around. That means that a double dip scenario is still highly possible. So you don't want to move your stop and be ticked out there. Okay? So the stop should still be here. And now there's your double dip. Now we add here again. Okay? Because now we have a red bar takeout here. See? Again, remember the green bar takeout story? Solid green bar. So now here I'm pointing out that we have a solid red bar again. See the solid red bar? And you need like 3 bars to take it out. This is a red bar takeout. Is that understood? The difference? Is it understood that we need a big solid green bar or red bar for a red bar takeout? And do you see why that is important? Because this implies a significant failure to follow through to the downside. If you just take a tiny little red bar, that doesn't mean anything. But the fact that this big bar has no follow through, that tells you something. That tells you that, hey, this could really very well be a turn here. Okay? All right, so now we add here. What do we do with the stop? I'll get back to that question in a second, Gregory. So what do we do now with the stop? We add here on the double dip. Move to the new pivot. Yes, Andrew, but immediately, or do you wait for 80%, 70-80%? Carlos says after 80%, Andrew says 80%, Gregory says immediately. I totally agree with you, Gregory. Immediately. And why immediately? Well, because now we have the double dip. How many double dips do you want? Okay. Most pullbacks consist of either 1 or 2 legs. Okay. So if you already have 2 here, and the fact that this red bar is being taken out here, and that you add here tells you that this is apparently the low of the double dip. It shouldn't go any deeper. It's done, right? If it breaks this one again, now there's a problem. Now you have serious trouble. You don't want that. So in this case, there is no need to wait to adjust the stop. The stop is here, okay? And now immediately you jam that stop up at this moment when you do this add here. Is that clear, the difference between adding here on the double dip and immediately adjusting the stop compared to adding on the first leg here and waiting to move that stop? And why this is so important? Do you see the difference? Do you guys understand this? So as long as you don't see a double dip here, you have to postpone an adjustment of your stop until you see at least 75-80% taken out. And look, that is very important because this trade is the exact example why that is so important. Because had you already pulled your stop here at this point, or even here earlier, you're just being stopped out here. You're done. Kicked out of the trade, right? So no stop adjustment yet, but here you do not want a third one. Exactly, Gregory, because if you have a triple dip, you have like a trend, right? It's just trending down, and you're actually long in a downtrend. That is not very very good thing to do, right? So okay, so write this down. Take a note of that. If you have your double dip, then you immediately jam the stop up. If you don't have a double dip yet, you have to wait until you are convinced that a double dip is no longer going to happen. That is basically the 70-80% rule. Okay? All right, and if you do that, then here, now we have our new high here, right? So now, basically what you have to do here is wait for the new high. And it doesn't happen. And maybe it happened later in the day. We don't know this. Okay? Our stop is here. And after this pivot here, somewhere, for example, when it takes this out, you could move your stop up a little bit to this level here, maybe. Okay? But you should still stay in the trade. Why? Because look, you're still trading above the MA200 here. So the odds are still in your favor. The odds are still that this trade is sooner or later going to make that new high. I'm not saying the chance is very big, but the chance is more than 50%. Okay, so even at some point you might even find a reason to use a time-based stop. Could be. I think that's what Tyler wanted to type here because it's his favorite thing. No, the Rip Van Winkle trade. I don't know what that means. That must be some joke that I can't understand, Tyler. You should explain that to me one day. Van Winkle trade. Sounds cool though. All right, so I think this is a very interesting journal here. There's a lot to learn from this, okay? So I hope you guys took notes, and if not, then just watch the recording and take those notes, okay? It's the guy who slept for 100 years or something. Yeah, right. Okay, I see it, yeah. No, but that happens sometimes. You cannot control when you are out of the trade, you know. You should just trail it out. Maybe you're in there for 4 hours. Who cares? Just pull that stop up once in a while and go do something else and come back and pull that stop up again if you can do it, okay? All right, next one. Betty. Betty, it's your turn. Here we go. Betty is trading Starbucks here, and trading Starbucks marks here the fabulous 4. Okay, I like that, as you guys know. And then step number 1, she says, I see a bear elephant bar plus. Bear elephant bar plus here. Okay, bear elephant bar plus, entering one lot here, another one here. So that's basically one step. So 2 lots short in the lower part of the bar. Okay, bear elephant bar plus. Let's take off 1/3 here and see if this is really a plus bar. Well, sort of. Okay, it's. I don't know. If somebody says I see this as a confirmation bar, then I would also agree to that. Oh, sorry, there is a question here, and it reminds me. I think I forgot about a question by Greg as well. Let me see. First, Hendrik here. Sorry, one question regarding the checklist. The RBI GBI not far from the 20 doesn't apply to the TTO. TTO meaning trade the open, maybe. Well, trade the open. Yes, okay. RBI GBI not far from the 20. That's right, because the 20 is meaningless in the first 10 to 15 bars of the open. The 20 is consisting of data from yesterday, basically. Okay, so if that is anywhere, then I would say that doesn't make any sense, because you shouldn't really be watching the MA20 in the first place. What you really should be looking at is the bars before the RBI. That is really what you should be watching. Okay, and if that is in the checklist, then I think that should be corrected to Hendrik. Thank you for pointing that out. Okay, and there was also a question before by Gregory. Is it okay to set a separate stop for an added lot? Always, Gregory. Yes, that's okay. If you add a lot, you can always use a separate stop on that one. You can. That's really up to you. Point is, here's the point. You should really have a method for yourself how to determine when to use a separate stop and when you don't use a separate stop. You should be very, very careful not to get into a habit where you let your mind or your ego take the decision for you. Today, you know what? I'll use a separate stop here. And in another situation, you say, I'm not using a separate stop here. Because in that case, your trading becomes very inconsistent, right? It depends on your mood, on your the hour of the day, it can depend on all kinds of things. That's not the idea. So what you should really do is try to write down a rule that tells you when am I using a separate stop. For example, I'll give you an example. You could write a rule like this. I will use a separate stop only if I cannot afford to use the original stop. Got that? So this is just an example. I'm not saying this is the rule that you should use. I'm just giving you an example. Just saying that this is a way to make it objective, right? To make sure that you do the same thing all the time in the same circumstances. So that rule would say that you always try to just add to the trade and use the same stop as you already had, except in the situation where you find out that you cannot afford to stop. Okay, then you just use the separate stop instead. Okay, so that would be one possibility to do it. Another rule could be I always use a separate stop on my ads. That's another thing. You could also do it that way. Okay. However, whatever you pick, keep track of that. Pay attention to what's going to happen, because the more separate stops you use, the more often you're going to be kicked out of the trade too early, because a tight stop implies that your batting average on that is going to go down. It may very well be that you'll find that in 60% of the cases, your tight stop is just going to be nick you out of the trade, and only 40% of the cases you survive that stop. That is very well possible. As a matter of fact, that is what applies to me. I hate using separate stops because more than often than not, I'm being nicked out of the trade. So I will only use them when I have no other choice. Okay? But once again, this is something you can decide for yourself, but do take that decision. Think about it later today, and then add this to your own checklist trading plan. Add a rule there and write that down. Say, look, I will use a separate stop, ... whatever you decide there, and stick to that. Okay? Okay, back to Betty's trade here. So Fab 4. So confirmation or anticipation entry. I can see both here, actually. I think it depends a little bit on how you look at it. If you compare to the bars from yesterday, this bar is bigger. It's definitely an elephant bar. Is it elephant plus? Not so sure. On the other side, if you look here, this bar is pretty big, right? It's almost 50 cents. In a stock like Starbucks, I can see that you see this as a plus bar, okay? So let's go with your version here. So we're picking the anticipatory entry here. We're saying that's the right thing to do here. Okay, ready? Your stop is event here, above the bar. All right. It's another one of those things. This is your zone, right? This is your MA200 zone. So let's say that this is sufficient distance here. It's okay to use event stop here. You don't need to use max loss per trade here. Okay, entry here 91 and 95, so average is 93. Your event stop is at 27, so that means that you have 34 cents is $68, exactly $64 is your risk on this trade. Your max loss per trade is 100. Awesome. Very nice, Betty. I love seeing you do this. You know, these are concepts and things that we are pointing out in this coaching program over and over again, and it takes time to practice this and actually be able to do it. And I just see you doing that here. You're calculating the risk. You're just making sure that you're well in your range here. So these are all conscious, deliberate actions, and that is the way you should be trading. Okay? Awesome. Very nice. Okay, here we go. You're adding to the trade on a topping tail bar plus a GBI, and you're adding here. Perfect. Very good. Now we're 3 lots in the trade here. Your stop is event and you're using the separate stop here. Okay. All right. Is that necessary? Well, from 80, if you use the same stop here, you're going from 80 to 27. So you would be adding $47 to your risk, and you would be going over your $100. So as you see, guys, this is the exact example of the rule that I just gave you that you could use. It's actually my rule for when to use a separate stop. So the first here gave her a risk of $68. Okay, $68 being well below the $100 that she promised herself she would lose on any given trade, max. Okay, perfectly fine. Operating well within her own risk boundaries here. Then adding to this trade, finding out that I cannot use this stop, because if I do, my risk would be 68 plus 47. My risk would actually be $115 now in the trade if I'm still using the same stop here. I cannot afford this. So now you have two options. Either you don't add to the trade, because you say, look, if I add and I use the same stop, I'm going over my risk here. I cannot afford it. Out of the question. Or option number two, which is the one she picked here, I'm using a separate stop and I'm still trading exactly within my risk boundaries here. Excellent. Just make sure you do the same thing all the time in the same circumstances. So think about that rule and write it down for yourself. Okay? So we're getting to point 3 here. Stop adjustment to topping tail. Aha. Where's that in the checklist, Betty? Where does it tell you to do that? Am I still audible? It looks like Betty is not with us now. Are you there, Betty? Well, I mean, it doesn't look like she's here, so let me ask the question. There is no rule here, I think, that says that you should be moving the stop now, because basically we want to wait for what? For what are we waiting here? When is your first stop adjustment? There are two options really for the first stop adjustment, and this is not one of them. Two options. Number one, anybody can answer this. That's right, Andrew, after the first pullback. Well, there's no pullback, so no stop adjustment. And the other one is what Carlos is saying, a break-even stop if the thing just gets out of control. If your profits get out of control, you can use a break-even stop. So there's no situation here either where your profits are out of control. So this is a no-no here. This is not a good stop adjustment. It's nowhere in the checklist. And all you're really doing is setting yourself up for a possible failure. If the thing bounces, tests the MA200 and goes down, you will have been nicked out of the trade. Right? Don't want that. Okay. Number 4 here. Covering one lot. Is that okay or is that not okay? Is that yes or no? No. Step number 4. Is that okay? Is it not okay? Is it yes or is it no? Let's try to make this a little interactive. Jose says it's okay. One answer so far. Is this a good profit take or a bad profit take? Gregory likes it. Simon likes it. Carlos says no. Oh, that's from another answer that's from a while ago. Sorry. Okay. Michael says yes. Yes, it's good. Why? Because we are 2 pushes away from a GBI. Remember, this is an extra profit take rule. You don't have to wait for 3 pushes here, provided that you are 2 pushes away from a GBI here, okay? As a matter of fact, you also have 3 pushes. Coincides here, okay? Great profit take. So 4 is the profit take here. And then number 5 is another add here. An add on a GBI with an event stop. Adding back onto the trade here. All right, number 5. Stop event, okay? And then in number 6, oh no, wait a minute. Yeah, sorry, add here. Number 6 is stop adjustment 2 lots from 1, 11, 10. From here. Okay, so when we get here, now she decides to move the whole thing down here to this level. Okay, And then we move on. In 7, we have a profit take here, 1 lot, okay? Stop goes down to 8 based on the 8 MA, all right? And then stop out here. Okay. So, pretty good trading here, I think. The only thing is, where is the whale? Where is the whale? It's here, right? There it is. See it? Here is your whale, Betty. So you missed the whale because you did not survive the pullback. You did not wait for a pullback to happen. You went into trailing modes here based on the MA8 and you were nicked out. Is that a good thing or a bad thing? Well, in this case, no, I think it's actually not a good thing to do that. In this case, you should have waited for the pullback because it's not that much profit that you have. You are going from 90 here to roughly 20. Okay, so you have 70 cents profit here. That's not incredible. I mean, if you go over $1 or so, I can see that you say at some point, okay, I'm going to milk this out. I will no longer accept this trade to take away my profits. But with 70 cents here, no, I don't think that's the right thing to do. So it would have been better if you just maintained your stop here, and then you would have added to the trade. Here, add again, right? Bring that stop down, take profits on the new low, protect your trade here, okay? And out. That's the way to do it. And that's right. Good point, Tyler. That's another thing. If you would see at the end here, you see these big red bars coming, right? Exhaustion here. There are no buyers. There are only sellers here at this point, right? Then it's time to really start to trail it out and get out of the trade. But there's no such thing. So more than likely, your pullback is still coming, and it did come. Okay, such thing. So more than likely, your pullback is still coming, and it did come. Okay. But other than that, nice trading here. I like the systematic approach and the calculation of the risk, Betty. I think you did a great job there, adding to the trade at the right points here. I did not like this one here. There's no reason to pull the stop down here. There's just either wait for the pullback, or when you have so much profits, maybe somewhere here, you say, look, I'm going for break even because I can no longer afford to give this all back. Great trading. Absolutely. Yes, sir. I totally agree with that. All right. I think I have one more here, and then I can hand over to Tyler. From Michael here. Michael points out I have a $70 max loss per trade. Okay. Twitter. Trading Twitter. And so he's marking the fabulous 4 here. This was the last bar here. This is the last bar from yesterday. So there is his fabulous 4. Right. Okay. Beautiful. Identifies, where are we? Entry 1-1. Oh, pardon, here, yes. Elephant bar. Elephant bar in location plus anticipatory entry. Well, if it's an elephant bar, Michael, then it's not an anticipatory entry, right? Then you need an elephant bar plus for that. Is this an elephant bar plus? Well, let's take off 1/3 of the bar here, okay? 1/3 of the bar, and that means that this should be elephant size. Compare to this bar, compare to this bar, compare to this bar, compare to this bar. Is this an elephant here? I don't think so. To me, this is not really an elephant. So this makes it an elephant though. But then we don't have elephant plus, so we don't have an anticipation entry here. Okay, you see that, Michael? Would you agree to that? Or disagree to that? That's also an option, of course. We can have a discussion about it if you want, if you prefer that. Okay, so anyway, in the trade here, 1 lot, and you use an event stop. So I guess your risk will not be a problem here. Let's say that you have like 20 here for your stop, and you have like, oh, you say 37 cents here. Okay, you already pointed it out. Perfect. 37 cents is a lot less than 70, so you're well within the proper zone here. Adding on the hidden RBI. Everybody see the hidden RBI? Well, look here. You see this drop here? So I'm assuming this bar first dropped, and then it went up like this, all the way to the high, and then it falls back again, right? This is probably what happened in this bar. So he's adding when it takes out that hidden RBI, that little bottoming tail here, and make sure he now has 2 lots in the trade. Very good. So now the risk would be, that's an interesting one. How much is the risk now? Did you calculate that, Michael? How much is your risk here? Because you have 37 cents here, and this will likely be 40 cents, right? So I would say that you probably have something like $77 risk in the trade right now. $70 was what you promised yourself. You used a separate stop. Fine, but that's not in your journal. That's not what is in your journal. I don't see a separate stop here. So next time, please mark that in your journal. Okay, I'm using a separate stop. Which again, if you apply that rule that I just told you to add to your trading list, checklist, the one that I use personally, but it's all up to you. That's exactly what you do. You can use the separate stop here and then still be able to trade here. Okay, so going sideways here a bit. Okay, there's another add here. Excellent. Actually, the add is here, I think, above the red here, but you cannot afford it obviously because you're already wrestling with this max loss per trade here. Okay, so adding more to the trade is not an option for you. As long as you see that there is an add here, the right thing to do is to not add here, obviously. Okay, so here we go, and you take profits here, taking profits, and you have like 1 push. Okay, you have like 2 pushes, you have 3 pushes. Perfect. Let's say you took profits at 10 here, and you got into the trade roughly at 52. So you have like 55. You have like 55 cents profit here on that trade. So not only 3 pushes, but also 55 cents profit. Perfect reason to take profits here, right? Definitely on a $50 stock. Very nice. At that point, you're moving your stop up to big bar. Where's that in your checklist, Michael? Where is that in your checklist? It's not. I'm afraid I have to agree with you. It's not in the checklist. What are the 2 first stop adjustments again that you could possibly use depending on the situation? What are those 2 first stop adjustments again? Break even is one of them. That's right. If the trade runs out of control, and the second one is the pivot. Okay, we have neither one here. The trade has not run out of control. And also we don't have a pullback, obviously, so we cannot add here yet, okay? Okay, now let's take it from here. You have your profit take. Now look, it takes out red again here, okay? Is this an add? I don't think so, because look, we have, again, quite a few green bars pushing up here. So adding here is not really a wise thing to do. You're expecting a pullback, really, right? We're way in this rally. We're expecting a pullback. Never mind the location of the MA20. It's just too early to really judge the MA20 here. Look at the move that precedes you here. That's what you should really be looking at. Forget about the MA20. It's too early. It has no meaning here. Okay? So now we're getting here. Is there something you would... So we get here, right? Is there a stop adjustment that you could do at this point? You just pointed out 2 stop adjustments that were allowed. Is there one that you could do here at this point? The break-even stop, right? Because look, we're going from here. So 50% is here, okay? 50% is like here. If you move your stop to here, the break-even, you are well below that 50% area. Because now we're here. So a 50% pullback, which would be healthy, and a bounce would not harm you. So it's perfectly fine to move your stop to the break-even level here. Okay? Carlos says it's tight. Well, Carlos, you don't have to do it. It's up to you. But at least I think in this case, one could argue that the 50% is well above the break-even level. But I kind of agree with you, Carlos. I hate the break-even stop, and I will hesitate using it until there is absolutely no other choice. I will probably do it when we get here. Follow through to this green bar. Because at that point, we drop back so much, the damage would be so big that there's something very wrong here. So I would probably wait until here, but I wouldn't object if you used it here after taking out that RBI. Because taking out the RBI tells you that this thing is going up, right? It wants to continue. So anyway, good point here. This is something we could do here, use a break-even stop. Going on here, then you go to point number, let me see, 4, big bar, okay. Well, already pointed out that this is not good, right? Big bar, this is scare trading. This is scare trading. You don't want to give back your profits. You just want, you're not willing to use them to get that bounce and then go for the whale, really. You're making it very difficult. By using the big bar here, you make it impossible for the whale to do its job. If it needs to dip here, the likelihood of you being nicked out before it makes the new high is just very big, very risky. You see that? And this is why this is not in the checklist to do that. Okay, 4, number 5, where is 5? 5, bar by bar stop. Yeah, bar by bar stop says, I want to get out of this trade. Please take me out. Please, market, I cannot take it anymore. I'm fat with profits. Please take me out so I can go to the bar and celebrate, right? So at this point, you have totally given up on surviving that pullback. Okay? Yeah, sounds familiar, Carlos, right? I know. Remember, I'm always telling you guys, I know exactly what you're thinking because I've been there. I've done that, I've been there as well. So you have no secrets from me. I can see from your trading exactly what's going on in your head. Okay? Just because I did the same thing in the past. All right. So then here, number 5, bar by bar, yeah, and then 6, I don't see 6, 7 is exit here. Okay, fine. So here's your pullback, right? There it is. So here's the ad for the pullback. And then here at this point, on follow through after this green bar, let me point that out precisely here. I would not adjust the pivot stop yet here. I would do it here on the follow through. I like the high here to be taken out because that is the point of no return. And then my break even stop here would go to the pivot here. And I would be waiting for the new high, possibly deciding at some point here that it takes too long, take some off here maybe, whatever. And I might still be in this trade. Okay? So the coaching question of the day, was this the pullback? I should be waiting for, considering how far the stock has come. Was this the pullback I should be waiting for? And yes, absolutely. Yes, that was the pullback. There it is. That's what you should have been waiting for. So you basically already answered your own question, I think, here. Okay? All right. So I hope this helps. I think I am, yes, it's Tyler time. It's Tyler time. So this took a little longer than I had anticipated, but I think there was a lot to cover here in these journals, a lot of things that I think were very much worth to dive into a little bit. Take some notes, hopefully. Hope you all did that. A lot of concepts, aspects here that I think were very much worth it. I can only hope you guys agree with that.
All right, sounds good. Sound check. How you guys doing? Trying to get the screen sharing to work here. Screen sharing interrupted. Reconnecting. Oh, there it is. Okay, good. How'd you guys do today? How was your morning? Were you patient enough to catch the big run up? No. Break even day? No. Oh, come on. There were some great runs in there. Okay. All right. Edward got the daily goal. All right. Good stuff. Good morning, Paula. I want to ask what you guys think. Do you think this is the low for Bitcoin and Ethereum and all that? Think this is the actual low? We got a double bottom. Yeah, it's hard to say, right? Part of me looks at the way that came up, and I was like, all right, this looks like buying, you know. higher lows, all that kind of stuff. But I just feel like it wants to scare everyone out like one more time. Like I wouldn't be surprised if we wake up one morning and it like jumped to 27,000 and it's already back up to 39 or something. Like they're not done scaring people. It's just kind of amusing to me. I'm still like dealing with friends who are like sending me FUD and I'm like, I don't like, stop worrying about it. like this stuff is like unending, right? They just keep sending that stuff in. It's crazy. How many of you write an intention for your trading days? As in addition, like in your journals or whatever, just write something down about what you intend to accomplish that day. Does anybody do that? Or one for the week? Okay. No, Hendrik. Or maybe look at some of the trades you took for the day and say, all right, never going to do this again, or just look at a bunch of your trades and go, what is wrong with something? Does anyone want to share what like their intention is, like what they write? You want to have something specifically meaningful that they write down? I like that. Respect your stop. Or your 2-bar stop. Okay. Gotcha. You mean like when a pivot is broken? Hold the winners until they're done. I like that, Edward. Not hit your max loss per day. Oh, see. I think that one's a problem, Jose. It's going to happen sometimes. Stop manage. Okay. Has anyone ever written down just like have an entire week of just losing trades and and just accept the losses? Like just lose correctly. Right? Like take an entry that is completely correct. Like an entry where you look at that and you're like, you have to take this. And just if it loses, accept the fact that it lost. Right? Like Simon's saying, I wanted to be mindful of my trading even when I'm not trading. I like to keep things in the back of my mind. A lot of times things just pop and I get it. Yeah. Like, I like just take trades that like, well, I don't know, this one doesn't feel right, but it hits my list of trades. It hits my checklist, right? The location is good. Here's an event, that looks totally clean, right? Because I think really once you get the checklist going and you start working on it, you expect it to produce for you, right? You expect it to produce right away. But like, for example, I'm looking at this one here from Greg, right? And at some point, this looked like an elephant bar, and I see the anticipatory entry in 2 lots, max loss per trade stop. And I think that the way Greg did this was really good. If you're going to have a max loss per trade stop way down there, it's only 35 cents away. I like it, right? So now here's the thing. We got in at 12 and we exited at 24. So we took a 12-cent profit here. So I think that's too soon to think about any kind of profit take. Yeah, there's Jan writing. He's fully prepared to accept any stop out or loss that results from sticking to the plan, knowing that this is a numbers game and that no individual trade is important. right? He reads it out loud to himself. You know, hits himself with a whip, all that kind of stuff. and then by the time the market opens, you know, things are good to go. But in a way, that really is the hardest part. Leave that up to me. Okay. No, I mean, I still struggle with it at times too. Me wanting things to be winning, and it just causes me to interfere with what's there, right? And and so, you know, I really think that if your intention has anything to do with not losing, that's your ego going in the back door, trying to influence what happens there, right? Now, I like what Greg did here because I think there's a lot of discipline in this. This, I think, who took this action, right? The checklist or Greg? Like, what emotion caused that, right? What is not expecting pushes? Who is that? Yeah, that's Greg stepping in. What do you mean reacting to the tail? You get up here, you see something that looks taily, and then like, where does the checklist say, take some, right? Like, again, the 30-cent rule, you know, it does not mean if it hits 30 cents, take profits. It means if you haven't made at least 30 cents, don't do anything, is what it means. It needs to have moved at least 30 cents. And I think, you know, if your risk is 35 cents here, I mean, gosh, if from here to here is 35 cents, you want to get at least, you know, you want to get at least that much, I think. You've got a lot of room here. So, I'm just picking on you on this first one. I go, it doesn't matter if it's a tail. But I do like how once you got this wipeout here, you didn't even think about it. You just took it, right? Yep, this is scary. It's a pullback, right? Then you got a double bottom here, a second attempt, right? You add it again, right? Bringing that average price from here down to more like here, right? And I think you understood, right, that the target became 50%. Can you see that? Right? It looks like you had every intention of saying, look, after that violent move down, it just, new highs became very unlikely, right? And so closing up here, I think is your whale complete. I think that's brilliant, right? I think the way you did that was brilliant. Because you said, look, this violence just totally wiped out the move up. This whole thing is now into question, and the probability of a new high is gone. And, you know, Greg said, all right, I'm going in, I'm taking the risk. I think once, you know, you started getting up here, you moved your stop up here. I think that's totally fine because, like, you had another pullback. This is a new high. The stop can adjust to pivot. And then your intention was to close the trade, you know, around a small profit and get out. And that's exactly what we were trying to show you last week. That is a great way to handle a move that violently goes against you. You will get this, you know, half the time you'll be able to turn a losing trade into a break even or better. I think Oliver, the figure he always gave us was like 55% of the time. When you get this will, you know, take a big loss and turn it into something. So, you know, turn it into a break even or better. So that's really nice if, you know, things like that happen. Now, I myself am a little more patient. I know it looked green, But to me, this doesn't look like the last 10 seconds of the play. I mean, I could be wrong there. But looking at where this bar closed, and maybe it did close here in the last 10 seconds of the play, this looked like a little anticipatory. Like way too early. Like that's probably a minute and 10 seconds into the bar. Am I wrong? I could be wrong. Okay. Yeah, I feel like that was a little early. In this particular market we're in, are things leaning bullish or bearish lately, last few weeks? Yeah, it's not particularly bullish. So I see a lot of these things getting wiped out. They start looking beautiful, and by the end, it's not. So it just gives me pause, and that's more the magic of it. Some of you have joined the black team, and what you're going to notice is that Oliver comes in and he'll say some days anticipatory entries are not working, and just say it's not good for that right now. And when he says that, I've been in this long enough to go, I'm not going to argue with that at all. I don't. I mean, I do have my own experience, and I go, this is one I can get into, and I do watch him take an anticipatory entry anyway, even though he's saying that. But he usually tells us after the fact. He's like, by the way, I entered on this one, 10 seconds into the bar, but I don't want you guys to do this. And it's weird because he gets away with that. But that's what, 40 years of experience look like. 35 or whatever. So this is a great play. I just, applause for Greg there. I think the way you handled that was really cool. You recognize things well. But not expecting, like, your job isn't to expect anything. I'm just reading into the words. Like, if you're coming from the perspective, this trade's just going to lose, I don't care, it's going to lose, then you shouldn't care if it doesn't get to your profit target either, right? Just don't even, so like, just take each action from the perspective of like a depressed loser, like, oh, this is going to lose anyway, so I'll just blah, blah, blah. And then when it actually really qualifies and you go, okay, well, I took that action, this one didn't lose, oh well. Flip your psychology, and like, if your expectation is just like things to always win and like to squeak a winner out of something that isn't working, like, that's just you that's your ego trying to know what's going to happen. You really don't know. Like, whoops. Nothing, like, even though this formed this taily thing, did you know that this was coming next? Like, you don't. Like, you just don't know. And sometimes you think it does and it won't. I mean, are there signs? I mean, yeah, the lack of clarity here, like all this taily business, but still you just don't know, right? You just don't know. It can start that way and then later be totally clear. I mean, Apple was like that this morning. The first bar or two was like, I'm not interested. And then I started to see things pick up, and I jumped into that and, rode it all the way up. But, that can happen, right? So I'm going to move on from that one. But actually, I really like that trade, Greg. You handled that very well. And here's one from Victoria, right? So, right, she did confirmation entry, long 2 lots, clear elephant bar, max loss per trade should have been down here. So she violated her max loss per trade by moving it in the middle of the trade. So, but my question is this: was this set up properly for max loss per trade? So let's see. She entered roughly around 49.90, and max loss per trade should have just been clearing all this stuff. It should have been way down here. So if she started at $75, that would have given her what, about 40 cents. I mean, basically, if she was long 2 lots, that's her stop, right? So what kind of stop should she have used? Even if she changed it to 100, 50 cents would have been where? Would have been like here. And something about the math doesn't make sense to me, right? Because this looks like she lost more than $100 if I'm doing my math correctly. Yeah, I mean, to me, it just looks like event stop is the only thing that could have worked. And the only other option was go in 1 lot, add down here, get out above 50%. That would have worked, wouldn't it? Because you don't know like how far back this is going to go. You enter right here with 1 lot with intention to add when you get something that gives you some confidence. All it does is fall out of bed. You're very close to your max loss per trade here. Although if you're starting with 75, you still would have stopped out, right? You still would have stopped out. But if it were 100, it would have kept you in, right? Because your max loss would have been down here somewhere, right? So enter here, max loss way below, add, and then you'd be, right, out break even. You see how that saved you? That's how max loss per trade is supposed to save you, right? That's how it's supposed to save you. So I think that's pretty cool, you know. That, you know, we kind of have 2 of these right in a row that fall off a cliff and could potentially rebound. Incidentally, you know, we got here and we got here. After we get to here, what's the expectation for the stock? What is formed? Which I could say almost exactly the same here. What is formed? Right? There's a high here. There's this. What's the expectation for the stock after that? You know, they're both kind of like that. Yeah, it's just trapped in a zone, right? This is the Rip Van Winkle effect. You know, once you get that massive fall and then blah, 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 and it, you know, this one went 75% of the way back. I mean, sometimes, like, it, and the only reason I say that is that, like, it just, yeah, violent, but not clearing, right? It's different if it clears the trap zone, but it didn't, right? Didn't clear the trap zone. It just made a big scary bar. Same thing here. Didn't clear the trap zone. I mean, the Fabulous Four, they both kind of do that, right? I mean, this might have the power to make it down here to the bottom, but you don't go, this is going to move $6 in a particular direction for that day. So you just take your whale complete and you're out, right? That's all you can expect out of that one. There's no space to fly into. So, you know, we're not taking these trades to waste the entire day on something where the magic's gone. I mean, maybe later on you start to see something and it becomes a midday trade, but we're not here for that, you know. So, you know, thanks Victoria for that one. Now we're moving on to Betty here. Now, this is another thing. Having just said that, here's the top of our Fabulous Four. Here's a massive green bar. We got a long entry here, right? What is this really in? I know there's violence there, but what's wrong with this violence? I mean, it does say elephant bar, in the trap zone, anticipatory, had big slippage, initial stop is the entry bar, and then point 2, where is point 2? Point 2 was just, okay. So entry bar was this second bar, just above the highs of this other one, and then a stop was like jammed way up to there. what are the odds of this entry bar, the second bar of the day, being stopped out? I mean, this one had to either go or be knocked out, and I kind of don't disagree with her. Just, I mean, I kind of agree, Betty. If this one gets knocked out, there's something wrong. But also just, I don't know how to say it. It's just, this bar doesn't clear anything. I don't like these, no matter how violent it is. I just don't like it when it stops right in the mess. I don't like the stopping point to be right in this mess. Like, violent bars, you can play them, but like, this is the picture of the one that just is going to go through uncertainty before it has clarity, right? And you're gonna learn that like, even stop and reverses that just smash right into your fabulous four. Those are the ones that give you the most trouble, right? We talked about the 360 if it was a stop and reverse, right? The ones that just smash right in there, you know. It just doesn't work, right? So, you see what I'm saying, Betty? You see what I'm saying about this one? It's like all the longs and shorts and all that kind of stuff. This really is just saying that it's trapped and trying to make sense out of this. There's much gentler things you can do to yourself. Yeah. Because yeah. I mean, I don't know how many people would think this is the kind of violence you want to enter on. Yes, it is a violent bar. I mean, is this the one that, I mean, we can see what just happened, but yeah, it's the position. It's when, what is it? It's just when things just close right into the biggest mess you've ever seen. So people are buying, and after a while you're like, all right, what idiot's buying right here? You kind of go, this is where all these people are starting to sell. And this is like, okay, we better start selling. This little tail here, this lack of clarity is where we go, I don't know. It just, to me, reeks of, we're now 3 elephant bars, right? Here's 1, here's 2, and here's 3 into resistance. So that's one of the things that, Oliver kind of talks about is, when you get like multiple elephant bars right into resistance, he will actually go the other way. He starts shorting the play, right? He just expects that, like, this is too much, right? All of this is too much. So when I see violence, I like it to clear something, or I don't like this to be, well, what do we call this? Narrow or wide? Is that narrow or wide? What do you think about this fabulous four, guys? Narrow or wide? Yeah. Wide. Andrew thinks wide. I think it's narrow. I don't think, I mean, I get that, like, yesterday's close is this little bar, but it's really just a 1 bar thing here. Most of it is this down to this is really the zone. This is the resistance zone right here. And I think this 25 cents, it just, that 25-cent area, I think, is likely to have, when you're just powering into it, is likely to cause some problems. So I'd like, you know, I'm more excited about this if this were wide. If this were like a 50-cent zone, I would be more excited about that. But I also like to see these clear something, right? Like if this closed up here, then I think I would have more expectation of follow through. So that's all. You did identify the violence there and you played it. It's just the second play of it. Once we've already kind of defined that the top can't take it out, and then now you're short 3 lots, and then it goes the other way and back and forth. I mean, it created a trap zone, didn't it? It just created a trap zone. So I'm just suggesting that maybe there are things that form a little cleaner, right? Like knock all the tails off all this stuff. Forget about all the taily business, and just look at the color. I mean, it looks like a barcode for scanning or something like that. I mean, right. It's a lack of clarity, right? That's all I can say. It's just, I think you'll find, like, position is important, but if we're looking at position, is this mostly above or mostly below the Fab 4 stuff? I don't know. It's hard to say, and if you have to turn your head to the side to figure it out, it's not clear enough, right? So I don't know, Betty. I'm not trying to run you down or anything like that. You're actually, you identified like this violence, but it's just smashing right into like a very dense area and having trouble with it. So it's one of the ones that I don't think, over time you're gonna want to take too many of, unless you have like a wider trap zone that kind of like gives you more space to run into. Because like if it's gonna get stuck somewhere, if this is gonna get stuck anywhere, it's gonna get stuck about 10 cents above your entry. I guess that's part of my concern. So I'm going to move on from this one, but interestingly, if you'd have just stayed long and added and taken this little whale complete, you probably, like entered here, added on the pullback, and just taken profits here. That might have worked, but it's still not really a pullback, is it? It's kind of a disaster. And it's hard because this, if anything, you should have been thinking maybe, is a short going to form around here? But instead you got this bar that went against position, right? Because it's in the trap zone, but it opened at a minus position. So think of it this way: if you enter at minus and you just power into the trap zone, it's still not a great looking setup, right? It's that's the one that even power from a single minus position into the trap zone, it's not going to be your ideal play, right? So, but anyway, I'm going to move on here to this one. And here's another one from Betty, right? I think Jan talked about, are we really going to anticipate on this one? I mean, it is. I think I'd wait for confirmation on this. I just feel like this was maybe early, just like we had 2 trades ago. We were talking about how you've got the position correct, right? Definitely a plus position. I just think the anticipatory, we got to be careful. Max loss per trade should be down here. And I find it interesting. I mean, you saw the violence here, and you closed and shorted. And I think that's pretty interesting, right? You notice that violence. If we go from the top here to the bottom here, I mean, there's 40 cents to move into, right? And it's kind of going against position, but I do agree that the position was sort of eliminated by this, right? The plus position, you know, Betty, rather than adding and trying to get out here, was actually starting to go, you know what, I want to be short this. And I have that happen too, where it's like something happens and I go, I'm not looking to see if I can add and get out break even. I'm actually looking to see if, you know, if I take a small entry here, if this will get me, if I just flip the trade and get my money back. And she did that. Is that what the checklist says to do? No, but interestingly, that is something I might do at times. Maybe not to this picture exactly, because I think it's still too close to here. And I think, now I do want to ask you this. If your written intention, like I said, is to take a stop, right? What emotion is causing you to flip this here? What are you trying to do? I mean, that is, I want you to just recognize, I'm not going to say it's wrong, but I want to recognize, what are you trying to do? Is like, Betty, are you there? I just want to make sure, because I see your name, but you may not be in front of the computer right now. Okay, maybe not. So, all right. So, guys, answer this for me. If Betty had not entered here, would she take this short? Yes or no? What do you guys think? Yeah, some are yes, some are no, but probably not, right? So what emotion is saying flip the trade right here? And like, I do get it. Like, if you erase all of this business, you just erase all of it, and you just look at what happened here, and then you look at, you know, 50% sell setup. That's actually not terrible. It's actually not terrible. But if we're following the checklist, because this is like, let's say you have a plan for playing VSSs, and anytime there's a VSS that triggers after a fluid move down, and it triggers at a, you know, 50% or below, I'm going to take it. Okay, that's a different story. And that's a different play. That's like, forget about your checklist, forget about position, forget about all that stuff. It's like, anytime I see a violent move, I have a 3 to 5 bar pullback, 50% trigger, I'm going to profit take on the new low. But what kind of play is that? Is that a checklist play, or is that more like a scalp to do that? Yeah, it's more like a scalp. It's a directional play. It's based on any kind of violence. You think you're going to get one more pivot. So, you know, my concern, Betty, is this came out of wanting to win, right? Wanting to, like, and you have to, it's great to take notes of this at the time, but this is called, I want to get it back. The trade lost, and I want to get it back. And I get believing that this is just not going to work, and maybe taking a scalp to get it back can work for you. That definitely looks like revenge to me. I know it very well. And but like if I'm just looking at this and I never entered in the first place and I hadn't just taken a loss, am I taking this? I'm probably looking for something better. So I just, maybe you guys would agree with me or not, but again, here is some violence. There is a little room. And then I'm going to take this a step further because we're going to go to Betty's next trade, which is this one. What is Betty trying to accomplish here? Right? So here we go. Short 2 lots. Took out green. Tried to get another one. Tried to get another one. Right? Piling into the 200 on a short, which worked out. And then, she took profits and closed the trade here at the new low. So she did identify the downtrend. And after she closed right here in the last trade, she started a new one here. I believe short, if I'm reading this correctly. Yeah. So I get that, like, okay, you're seeing the downtrend, you're seeing the power here, but man, if there's a place where this gets dangerous, it's right here. Shorting into this zone, if you do it 20 times, where are you going to end up? Green or red? Right. I think in the end, this is likely, long move down, whale complete into the 200. How often is that going to follow through and give you this? Well, not certain, right? especially after this red bar has been taken out. Yeah, it could keep going. I mean, if you entered up here, you got to trail it out properly, and it did make a new low, and then it turned around. But it's it's interesting, and maybe something was going on. Maybe the market was falling off a cliff, right? Market was falling off a cliff. Everything's reversing. Take the sell setup, scalp it, see if you can get your money back. Might work. It might work. There might be a little room there. And I actually see the difference between this one and this one, where I don't think there's room, right? This doesn't have room. So I'm glad, Betty, that you shared this with us. I just want you to be aware of what emotion caused this, just to make sure it's not the get it back emotion. And I will say there have been days where, like, what we're getting is market selling. She might have seen the market tank and saw this little red bar and said, you know what, small risk, let's flip this thing. What I would have preferred, Betty, if you got in here and this made a nice new low, why not leave one on? Can't let one just trail out. Would have made it down here, right? Like, so I said that with the short, but let's say you short 3 lots here. Small stop, right? You hadn't lost much. You lost like $20, $30, something like that. Go in here. Now you've got another $30 loss. By the time you get down here and take some profits, can't you leave the last one on and just say, break even, stop. Let's checklist this out. And then, see what happens here, and maybe you get a time stop here or something like that. So that's just a thought. Sometimes you get more than you expect, and sometimes, like Oliver does say, if you get into something and immediately it just takes off, that's the one you got to sit through a pullback. Here's your pullback, right? That's the one that's going to go much further. When you're just like immediately, you are this little I wonder if suddenly turns into a hell yes, like that's the one that's going to go much further than you. So you get out here and then you miss like another 50 cents or $1 or $2 or $5 or whatever, you know. But again, you've got a big trap zone here. So like this is playing into a zone. I'd rather this didn't have any of this stuff, right? So anyway, but cool, right? So you flipped the trade around, you saw this violence, and you took it the other way. And I think without the trap zone, I kind of like it, right? Like if you could just erase all this stuff over here, if you saw that, and this triggered right here with like a small risk, I think that's a neat scalp type play, right? I don't know. Would you agree, Jan? By itself, it's not terrible. It's just playing into, or Tony, you know. I mean, it was a violent wipeout of the initial bar. It's just the position is something that kind of cancels it here. It makes you go, nah, not my thing. Yeah, if it was 50 cents higher, it'd be better. So it's like if the trap zone was down here, this would be a hell yes, right? It's just you want it to be. I just don't like. I don't like my trade playing into this. That's all. Yeah. So cool stuff. All right. So, all right. I got two more quick ones here, and then I got to hand it over to Tony. All right. So, Michael took this off the 200. First bar was kind of neutral. Yeah, she is shorting in position single plus, right? Long two lots right here on the elimination, right, of this zone. I think it's anticipatory. I think it's, right, out of 10, how strong is that event, guys? Out of 10, how strong is that event where that entry was taken? Seven? Okay. Gregory says 2. Jose says 8. I mean, the event itself, I give like a 4 to 6, somewhere in there. Not clarity for me. Position, though, out of 10, what would you give the position? Yeah. So you put the two together, and maybe you average out at about 7 out of 10 for that entry. So it's not terrible. If you average the two, you go, it's not terrible. Like I wouldn't disagree with this, and I totally agree with the event stop. I like this profit take. Beautiful. You know, you got your 3 clear pushes. Fantastic. I like the add on the elimination of red. Perfect. Up here, kind of an early profit take. Might be a, you know, it's not wrong. I would have made it up here, I think. And I think over time you will, right? It's a new high, but the real, like, this is the beautiful 50% trigger. And you're going to see when you get the 50% triggers, you need to like make a folder of these 50% triggers because they're going to get way up here most of the time. Even if only 6 out of 10 really clear and make a new high, try not to make it like, I feel like there was, you know, some emotion there saying, this is where I got to take it, right? Just let it go, right? Leave it alone. Like, if this gets wiped out, then, you know, if this is really wiping out this green bar, then say, yeah, all right, I got to take one, maybe below the low of that green bar. But like when it's just breaking this, draw this in all together, right? This is a solid red bar like this, right? This red bar is really solid. The place where you took this is right where that red bar got wiped out. I think when you get a solid red bar wiped out like that, you're going to get at least this. Cool. Good. Glad you see that, right? Because that's a pretty violent move down that was wiped out with some power. I mean, what? You're all going to tell me what this is, right? What is this? Right? Yeah. When you get a 180, you expect at least this, right? So I get that, right? So you have your first pivot. Up here, let's see, at number 5, when you get up here, you do a big bar stop adjust. I mean, I guess. It's not where I would stop adjust. I also get the bar by bar stop adjust later on. That makes sense. It's going a long ways. So yeah, there's something. Yeah, I'm not saying I disagree with the bar by bar. Might I have done the same thing? Yeah. You know, because it's moved pretty well. Why after all this might I think there's another pivot coming? Why up in here do I think this isn't over? What about that says to me it's not over? Yeah, exactly. You guys got it. When things just peter out with a couple of small bars at the end of the move, this thing's not even close to done, right? Right? Like when it gets up there and then the last bar looks like this, or some bar comes in and looks like that, now I start to doubt things. But in terms of size, these look scary, right? But are they? You know, it's just going to run into the 20. I just think there's another pivot in there. Now this one might have got you, right? That might have got you, but is this if your stop was jammed up to here, is this a 2-bar stop? Is that a 2-bar stop right there? Because, right, that would be a pivot stop, right? No, so you would have made it up here. Now, when your new high bar turns into a 180, this is where you're out, right? So I just think you could have got there. Now, the interesting thing that I find is that when you get like multiple bars up like this and you just take it here, even after the weird pullback thing that messes with you for a while, in the end, if you got out here versus here, and I shouldn't tell you this because you need to be in the practice of just waiting for this to get to here. But I find that it only gives you an extra 5 cents or something like that a lot of the time. Because once we start going this way, it's going to be Rip Van Winkle, right? So, okay, so on your checklist, it says something about big bar. Actually, yeah, what am I going to say about big bar? Big bar, okay. You've got a little bar here, a little bar here, a little bar here, and then you got one of these. Now you've got a little bar here, a little bar here, a little bar here, a little bar here, and then you got one of these. So you see how one of these bars is not like the others? That's when you use big bar, right? The thing's kind of just meandering, and then clarity, right? Stop adjust. And it's meandering, clarity, stop adjust. So it's a certain kind of a thing. Am I wrong, Jan or Tony? Is that how would you would use that? It's when you're creating this weird staircase, right? Where it's like solid, clear bar, and then some stuff, and then solid, clear bar, and then some stuff, and then a solid, clear bar, right? It's a kind of trend, really. For me, that's what it is. Because usually, whenever you get into this big bar stuff, what you're really talking about is bar by bar, in a way, you know. And if you're going bar by bar, you got to use the bar by bar rules, which are when you get far from the 20, then, you know, and when I say far from the 20, you need to accelerate from the 20, and then you're bar by bar, right? It's not this. This isn't really the bar by bar. Because why? Because it's just in this channel, right? It's just in this channel. So again, it's like, can this pull back 50%, hit the 20 and make a new high? Yes. Right? So the reason, it's like, look, you've taken your new high profit take, you've taken your first one. Why can't you just let this one be a home run? Is the question. Why can't you let this last one go $6 for you? That's what we're trying to do. Because that one trade that really goes is going to make more money than all these stops that you have, right? So the problem is we get all anxious here to leave the trade when we should be like, you know what? There's probably more to this. We don't know that this is going to stop here. Like, this is forming a lot of green. Is it going to have a double dip down period? Yes, but like, this is just saying I'm not going to live through that. Because in a way, this first pullback was all kind of part of a first leg on a larger time frame, the way that this one formed. That's just the way that this one formed. Others will go, and that's too much, and then it's going to go like that and down. But this one stayed in a channel, and in a way, that's just going to, you know, come up here and maybe later on take off again, right? So, so I don't know. I hope that made sense, Michael. I'm like, and I hope that the big bar thing made sense too. So if the pullback failed, where do I exit? You mean this one, the first one? Or up here? Well, okay, so you've moved your stop to here, let it pull back, right? And you might get a 2-color rule, you might get a time stop. It has to form, right? You don't, see, that's the problem. When you're here and you get to your new high and you start getting up here, you're like, where do I stop out? Where do I stop out? You got to let the next thing show itself. But if you're not willing to let the next thing show itself, will you ever make it to the one that makes 6 pivots? Will you ever get there? You just don't know. And that's why I say, go into the day. What if your intention is just to let this trade turn into a loser? Meaning, I'm not gonna like get out early to make this win. I'm just gonna, like, even if this goes like that, I'm gonna sit long enough to let it hit this stop. You know, like, how often is it going to get? You're gonna move your stop here and then just go straight down like that. How often is it gonna do that? Like, no way, no place to adjust your stop. And the other thing is like, you took profits here, you took profits here. Is this trade even a loser at this point? Geez, I'm going too far over. No, it's not, right? So, you know, and what did I say? The ones that turn green right off the bat tend to be the big winners. Those are the ones you got to leave alone, right? Well, this one was off to the races, and you can leave it alone. So I'm going to do this real last one here for Akka. Akka's not here. Long 2 lots. Love the initial event stop on this hybrid bar. The size is good enough. The way it closed is good enough. HRBI. Let's look at this again. No, that is not an HRBI. 2 pennies is not a hidden RBI. This is an RBI. Could have added here. Profit take up here. Great. Stop to color. I think that's justified. I think stop to color is justified once you get up here. It's pretty much the same as a break-even stop. But again, that is Akka jumping in there saying, I'm just not going to let this trade become a loser. Just saying, I don't want to let it come back here and do that. I wouldn't be in a rush to do that. I think this is enough power once we get up to here that any pullback into here, I'm not worried about. I'm just not worried about it. But whatever. So we got up here. Took another one up here. And then we added here, which I think is beautiful, right? Stop to pivot at 0.7. Took one off right here, and then the low of all these was taken out. And I think, so Akka, the problem with time stop here is the highs are getting lower. This is a pullback. And of course, we can't see if it made a new high later on, but this really could have. And again, searching for that, what is the emotion that's trying to do this? See, you're trying to make this trade a win interferes with everything. So, and I think, if you guys pay attention to that, you'll learn a lot, right? Well, things that you just thought, I didn't think this one would go. Well, it did. All right, leave it alone, right? Leave it alone. Sit through that pullback. Scary thing in the top 50%. Now I would call this the failed new high, and I think you could call this whale complete. If you called this whale complete because it just reversed right here, I wouldn't have a terrible problem with that. I don't like that this didn't go through. When this, whale complete is a proper reason to exit the trade. Okay? So this is for Akka, right? If you don't get whale complete, right, when it pushes up into that new high, then you got to leave this pivot stop. You can't start finding little ways to jam it up. You lost the new high. I think that you have to leave the pivot stop and let this play out. And I don't think it got a 2-bar stop. Is there anything really scary about this going sideways from here? In the top half of the day, I don't, if this gets going, this could really go much further, couldn't it? So I just think, I don't like this time stop idea, because that was not a time stop. That was a pullback, in my opinion. Well, I think very objectively that was a pullback. Higher lows, higher highs, all that kind of stuff. So just didn't want to wait for a second pullback, and maybe it was lunchtime or something. I don't know. Anyway, I got to hand it over to Tony. Sorry, Tony, for taking so long. But you guys are going to learn some things about RBIs and GBIs, and then we're going to see you on Wednesday. You ready to go, Tone? Great stuff, everyone. Boom. Turn off the screen share, right?
1, 2, 3. All right. Thank you, sir. Great stuff. Oh, I get a 5. High 5. Let's see if my screen share decides to work today. Looks like it wants to. It's trying to. It's working on it. Bingo. Working. Alright, great stuff. So, I'm going to do a little presentation on ribbies and gibbies for you again today. For the new folks, that will be new to them. Hopefully they'll learn something. For the folks who've been around a little, this is good practice to go over things again. It's good for you to repeat things. Sometimes you'll see something that you didn't see the first one or two times. I always enjoyed going to Oliver's classes over and over and pick up more knowledge from the master. That was always fun. So while I'm talking, if you guys look for ribbies and gibbies, if you find any, let me know so that at the end of the presentation we could look at it. Some that you find if you're looking at your charts. That would be cool to do. Right, the market today on the Dow gaps up. And then goes sideways and then continues to go up with little topping tails. Then rolls over. At this time, a little after 11, 11:15 or so, rolls over. Right? This is how you read the markets, how you read the chart, right? Gaps up, gives you a nice green bar, and follow through, nice 45-degree angle on the NASDAQ. Then it kind of hesitates, gives you like a little ribby right there, right? Goes sideways, gives you a bear 180, right? Doesn't quite have follow through, goes sideways, gives you a nice green bar, so it's continuing sideways, right? Green, red, green. So it's staying on the upper area of this chart. So NASDAQ is strong today. S&P 500 gaps up. Gives you a green bar, like a ribby right here, right? A little rest and then follow through. Nice green bars right after that. Nice 45-degree angle up. Then it levels off, goes sideways, and it's kind of staying in that sideways area. And so the NASDAQ was strong today. You see Microsoft up over 2%, Apple up over 1.5%, Google up over 2.5%. So all the big tech names are up. The financials are up. The banks kind of neutral, up a little. But the only thing down is healthcare, selective ones. J&J, Gilead, Lilly, and Bristol Myers are up. United Healthcare is down, right? Those are not doing too good. Consumers Defense, well, Dollar Store is down almost 3%. But it looks pretty green overall. It's a strong market today. Here's another heat map. Here's another heat map that I look at as well. Right? It's hard to see the numbers. They're there. MGM's up. Norwegian Cruise Line, Tesla, RCL. You see, so the cruise lines looks like they're nice and up today. Nvidia, oof, it's up nicely. One of my favorite stocks to play is Nvidia. I mean, not to play, to invest in long term. Great company. So those are the charts. How the market is doing. Let's go over some ribbies and gibbies. You guys can look for them if you have a chance. You look at your charts. Here we go. Okay, red bar ignore, right? First bar must be red. A bullish bar, I'm sorry. First bar is a bullish bar. The red bar ignores the pause in between. Right? Has to stay, this pause has to stay in the upper 1/3 of this bull elephant bar. So it stays up there, right? And it has nice follow through with another big green elephant bull bar. It's kind of like a picture perfect scenario of a ribbon, right? A green bar ignore. Now they're not always going to look like that. You have all kinds. You can have 2 bars. You can have hidden ribbies. You have all kinds of things, right? But this is kind of like, if you see this, gives you a real good indication of a nice ribby. Staying in the upper 1/3 of the bullish bar. Right? A little pause and then nice follow through. Another one, right? And this works on all time frames. It could be the 2-minute, 5-minute, 10-minute, 15-minute, an hour, daily, weekly, monthly charts. You know, it's amazing how this works on all different time frames, but it does. We'll go over some examples and I'll show you. It also works accurately on all price ranges, right? So it'll work on a $5 stock, $10 stock, $20 stock, $30 stock, the lower price range that probably most of us are in. But it could work on a $500 stock, $600, $700 stocks. It's amazing. It works in different time frames and it works at all price ranges. And it's pretty accurate. It's pretty amazing how this is accurate. I've played it many times. I really enjoy ribbies and gibbies. I mean, they're great. Even if you don't learn everything else perfectly and you have this down, you can make a living off of just playing ribbies and gibbies. It's how amazing they are. And I know this is repetition for a lot of you, but repetition is what creates mastery of your skills. And the game here is to build your skills up. We're trying to build your skills up. Everything we do is to build your skills, right? We're giving you knowledge, and we're giving you experience, or you gain your experience. Hopefully, we're teaching you how to get the right experience, right? So you get the knowledge, the right experience, and your skills level start to take little steps higher and higher and higher. Your goal is to become a master trader. If you become a master trader, you'll be set for life financially. But it also spills all into everything else in life because you learn discipline and psychological game. You know, you can control. So building your skills is what we're trying to do here. Oops. Okay, here's a red bar ignore, right? So this is like a breakout. It's going sideways, it breaks out. You have a bull elephant bar, and then it pauses. It breaks a little bit, right? And then it has follow through and continues on. So this a different look at a ribby, right? This follow through kind of took a little longer, and then it gave you that bull elephant bar. It wasn't one exact bar right after. You're going to see different scenarios all the time. As Oliver says, strength tends to beget strength, right? So this is strength. Pause a little bit and gives you more strength. Here's another example. Right? This was a bearish period. It comes down, hits bottom, and bounces up. Gives you a bull elephant bar. You get your ribby. It stays in the top 1/3 of this bar, right? Then has a nice follow through with another bull elephant bar. There's a couple more examples. Here's a ribby. If you combine these bars in your mind, this stays in the upper 1/3 of these full elephant bar, right? And then has follow through. Here's another one. Combining these bars and has follow through. They're not always going to be picture perfect. So you have to use your mind sometimes to combine these bars and see how it stays in the top 1/3 of the area of this area and has follow through. Here's another one, right? This has nice breakout, rising 20 moving average. You have a bull elephant bar, has nice follow through, another big green bar, and pauses, goes sideways a little bit, right? So you're combining all this bar. This stays in the top 1/3 of this combined bars. Then it has follow through. It gives you a nice tiny little bar there, but narrow bar, and then big full elephant bar, right? Nice follow through. Okay, another key thing to remember here is many times what happens on the left side of the ribby happens on the right side. It's amazing how that is accurate. I mean, sometimes this rolls over and just collapses and you're out. It doesn't work, but when you have a true ribby and gibby, you see what happens on one side happens on the other. It's amazing. And many times I come in on just this side and just get this profit on the one leg. I don't catch the whole thing. I didn't see the thing develop, but I caught the last part of it. I'm in and I'm out. And made 50 cents, 30 cents, whatever the case may be, right? What happens on one side happens on the other. Okay, here's a different time frame. Here's a 5-minute chart, right? You have a nice bull elephant bar. Then it goes sideways, stays in the top 1/3 of this bar, and then follow through, right? Nice green bar, another green bull elephant bar, and goes up. What happens on one side happens on the other side. And this is the 5-minute chart, right? If we look at the 15-minute chart, see the same thing, a bull elephant bar, right? So this was all this, but combined over here, right? A bull elephant bar, a pause, a little red bar, ignore, stays in the upper 1/3, and then follow through with another bull elephant bar, right? What happened on this side happened on that side. So this bull elephant bar on the left side happens on the right side. It's amazing how this pattern is consistently and profitable for you. Sometimes you'll see double bars, right? Instead of one little bar as a break, you'll have two bars as a break. It has nice rising 20 moving average. You have green bars, 4 or 5 green bars in a row. 1, 2, 3, 4, 5, 6. Then it takes a pause. This pause is 2 red bars, but it stays in the top 1/3 of these combined bars. And then has follow through, more green bars, right? Follows through a bullish period here. So what happens on the left side of this ribby happened on the right side of this ribby over here. So ribbies are great entry points, right? Put your stop here, enter, and let it rip. You catch that leg of it. So here you have multiple ribbies are good, right? On this upward trend, right, you have multiple ribbies here. It's probably riding the 8 train. I didn't have the 8 on here. But this, you have the Fab 4, has a nice lift, and then it shows you a ribby, right? So you get in here, you put your stop, and you enter on the ribby. And it has a nice follow through, gives you another ribby. So you can, if you're already in, then you add. As it follows through and moves up, then you move your stop, right? Not before. Your stop is last. Your stop comes after the follow through continues on. Then you move your stop. Or if you missed the first play, you can get in here. Enter there, put your stop, and let it go. Gives you another ribby here. And another ribby. It just continues on. That's 4 ribbies there. Amazing. Actually, this one was 1, 2. And then here, this is a little pullback. Probably broke through the 8. Imagine the 8's going. If this is a 20, the 8's got to be like halfway and a little less, right? The 8 would be right through here. This broke the 8. The 8 would continue like that. Pulls back. 3-bar pullback, keeps going up. Gives you a ribby, keeps going up. What happened on this side happens on that side. Continues on. Pulls back to the 20, the topping tail, and you're out. You know? This is a nice run with multiple ribbies. 1 pullback and multiple ribbies. 2 pullbacks. Here's one that I caught a little late, but I caught it, right? I saw this ribby, and I'm like, oh, let me jump in. So I jumped in at the end of this bar. I should have got in a little earlier. See, you always critique yourself. I always critique myself. How I could have done it better. Right? I could have got in earlier. But anyways, I got in here. It continues on, riding the 8 train up. This happens to be nice follow through. All green bars. No red bars here until we get up here. But this is a long leg, right? This leg was shorter. What happens on the left happens on the right. But this leg extended out even longer. Yeah, these topping tails, which is a sign telling me, okay, this is about done, right? It pulled back to the 8 and continued on. Then I started peeling out. These are my cells. Bam, 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 right? I caught the second half of the whole ribby setup, and I caught the long leg on this one, and I milked it to the end, and I had nice profits on there. Here's the numbers, all the numbers, right? So if you just catch one side of it, you can be profitable. All right, let's talk about Gibbies now, right? The green bar ignores. They look like this, right? This is kind of pretty close to a picture perfect green bar ignore, right? So you have a bearish period. A big bad bear elephant bar coming down on you. All right. And you have a little pause. You have a green bar ignore on the bottom 1/3 of this bar. Right? And then you have follow through. Keeps going down. Right? And just like ribbies, gibbies work on all different time frames and all different price ranges. Yeah, and they're pretty accurate once you get them. So this is another tool to put in your toolbox, is ribbies and gibbies. Become experts at this stuff, and your trading skills are going to go up. You're going to become more consistent and more profitable, right? Repetition's what creates mastery, because you got to practice these ribbies and gibbies a lot. Become really good at them. So gibbies are great entry points. Here you see a gibby kind of develop. You combine this, right? Enter here. Look at this drop. Ooh. This is the first leg, and this is the second leg. And it just drops. Then it goes sideways. stays in the bottom 1/3 of this big bearish elephant bar. And it drops again. Right? You could have added to this as it drops, then you move your stop. You would have been really profitable in this trade. Let's say you missed all this. You didn't see that. Just get in here, right? You enter here, you put your stop there, and let it ride. Right? You could have made, what, 10, maybe 10 cents on this. Not much, but we don't know if it would have continued on down. But at least you're profitable, right? You don't want to go, you don't want to take an L, take a loss. Okay, just like ribbies, gibbies, work on different time frames. Here's the two, right? This was a gibby, multiple gibbies on this leg going down. Any one of these you could have entered in. Or if you entered in one, you could have added. As it drops down, then you move your stop. You add it. As it drops down, then you move your stop. Kind of like a trailing stop, and it comes down, you add, move your stop. Then you get this 180 down here. It's a signal telling you, hey, this trend's over. It's done. Take your profits and get out. That's what it's saying to you right here. Take the money and run. So learn to listen to what you're reading here. Here's a 5-minute chart. Well, here you use a 2-minute Gibby for entry, but the 5-minute chart is straight down, which is nice. All right? This could have been like a Gibby in this here, but it was red. It goes all the way down. Nice run down. Here's a 15-minute chart, right? You have this nice bull igniting bearish elephant bar coming down. You see that, then you get the pause. See a little Gibby develop, and then it drops more. Stays in the bottom 1/3 of this bull, of this bearish bar, right? And drops down. What happened on this side more or less happened on this side. So this leg is not quite as long as this one. Maybe if you would have caught it down here. Or maybe if it continues down. Right? Here's another Gibby, right? We have a downward trend. Kind of breaks down here. A breakdown. Here's your Gibby. Enter. It goes down. Put your stop up here. You enter and let it go down. Here's another Gibby, right? You can add to it. Let it go down. Now you move your stop after you have follow through and you're moving down more. You see another Gibby. Oh my God. So you're probably fat with profits now. But you could add some more. As it keeps going down, then you move your stop to here. We don't know what happened after here, but it looks like maybe another Gibby developing. Well, that's how you would play this trend. It's not hard to do. This is not rocket science. This is repeating the same things over and over and over. Green bar ignores, red bar ignores. Repeat those over and over and over. It becomes second nature to you. So, important things to remember. The best red bars stay within the top 1/3 of this. Right? So this pause, so this red bar ignore stays within the top 1/3 of this bull elephant bar. Then has follow through. Similar with the Gibby, right? Stays within the bottom 1/3 of this bearish elephant bar. And then follow through down. That's what you're looking for. Ribbies and gibbies are great entry points, right? On this ribby, you would put your stop here where this red line is. You enter here where this other line is. Enter there and you let it go. This is nice, profitable area for you right here. Similar with the gibby, right? You put your stop here where that line is and you enter right down here and let it drop down. The profits going down. What happens on the left side of your ribby happens on the right side of the ribby, right? It's very canning how this happens like this all the time. What happens on the left side happens on the right. On gibby is very similar. What happens on the left side happens on the right. Right? It's a nice pattern to look at. It's nice to know how this happens, like I would say 80% of the time. Yeah. Sometimes it's going to turn around and drop on you and not work out. But like 80% of the time you have a nice ribby, works great. Okay, that's the end of this little presentation for ribbies and gibbies. You guys should be becoming experts at this. So let's look and see. Oh, I didn't even open the. Let me open the. See how things are going there. I like this TC2000. I use it to practice, to scan for things and all kinds of other things I do with it. All right. So here's my NVIDIA, right? Beautiful NVIDIA. It's up almost 5% today. Nice. They're going to have a 4-to-1 stock split coming up, I think next month. And they're just doing really well. So we had a little ribby here this morning. Now this is an expensive stock. You guys don't play this. But it happens in all price ranges, right? In all different time frames. So this is a 2-minute. We could say instead of 612, you could say it's $61, right? We cut it with the decimal point over, it's $61. You see the gap up. Here was the Fab 4. It gaps up. Little bull elephant bar, followed through, gives you a ribby. You see this ribby, oh, jump in there, right? You enter in here, you put your stop and let it go. Gives you like another ribby almost. And it goes sideways, riding the 8 train up. Gives you another ribby. Another ribby. Another small ribbies coming riding the 8 train right up the ribby 8 train track. All the way up. You would have been nice profitable on this trend right in here, right? Then it goes sideways and continues higher. Goes back. Well, that one was a great one. But look at Apple this morning, right? Apple gives you a ribby here. Up to this, gap. We have the Fab 4. You have the 200 moving average. You have a green bar with follow through. This is kind of like a ribby here, but it pulls back pretty hard. Goes sideways and then goes up. Gives you a ribby here. Gives you a ribby there. Keeps going up the 8 train. Topping tails. Oof, this is the exhausted area. Topping tails. Big flag right here saying, get out. This trend's over. You're done. This is the whale we're looking for, right? Here's the whale. Can you take ribbies even if it's far from the 20? Well, if it's far from the 20, you have to be careful because it always pulls back to the 20. You'd like it to be like a trend like here. But you can at certain times far from the 20, but depends how far it is away from it. It's best to be near it. possible, but you just have to see the scenarios are always going to be different. They're not picture perfect, right? These are a little ways from the 20 and it works right in here. This one's closer to the 20 and it works. This one's further from the 20 and it works. So if you're in that range for this price, you're good, you know, on this particular stock. But other ones, you could be further away and won't work. Each scenario is a little different. See this one? Gaps. Look at this Fab 4, narrow Fab 4, which is nice. Gaps up, gives you a tiny little red bar. So this is like a ribby right in here. Because this gap up is a strong green elephant bar. And continues up, gives you another ribby, right? Continues up. These are near the 20. I usually don't look at if it's near or far from the 20. I just look how it develops, right? From a bull elephant bar off a narrow Fab 4. You know, you have a ribby. What happens on one side happens on the other side. It stays in the top 1/3 of this bull elephant bar. Those are the things you got to look for, right? So this stays on top of the third. You combine these bars, it stays in the top 1/3 of this bull elephant bar, and has follow through and continues on, right? So this, I wouldn't even be looking at the 20. I'd be looking at what happens on one side, happens on the other side. I'm riding the 8 train up, all the way up to this topping tail is a big flag telling you, get out. It's time to get out. Take your money and run, right? You had a nice run up here, pulls back, goes up again, pulls back. It's like a W here, right? And you get a bare 180 right here. And then it just rolls over and starts heading down. Starts giving you gibbies, pulls back. Now, there's a nice gibby right here. So after that, it was done. See, this flag's telling you, hey, I'm rolling over. I might go sideways a little bit, but I'm rolling over. So if you're long, you're out. You know, try to catch the top of these tails getting out. You layer out. Here's snap, right? Snap is, here's your Fab 4. Has green bars up. This is like a ribby right in here as well. If you count the gap up, combine all these, stays in the top 1/3 of this bull elephant bar, and then continues on. What happened on this side, which is pretty long, happens on this side, kind of. Right? It's not always going to be picture perfect, accurate. But this is a nice ribby right in the middle of this. If you missed all that, and get in here and catch this leg of it, small leg, right? Goes sideways and goes up. So that's a nice little ribby there. Here we have a gibby, right? Dash, door dash. This one goes up, rolls over, starts coming down. Starts showing you a bearish run down here. These are kind of like gibbies. But this is a better one. You know, a little more picture perfect. Right? Bearish period. Stays in the bottom 1/3 of his elephant bar and continues on. That's follow through. So you could have just got in here, put your stop on, let it rip, try to catch a bomb on these tails. Right through the 200 moving average. Well, that would have been a little more trickier, but it could be done. Here's RCL. Here's your Fab 4. It's in the trap zone here, right? Because you'll bull 180. Starts going up because you're ribby on the 200. Gives you a nice ribby here. Keeps going up, pulls back, small ribby, and then pulls back hard. Gives you a gibby, and then continues on its way up the 8 train. Has power through here. It looks like they're starting to buy the stocks of these cruise ships All right. Looks like it should be starting up again soon. By next month. Good RX. I like Good RX. I use them. So you have the Fab 4 over here. Caps up. It gives you a ribby. Gives you another nice ribby right in here. This is a nice looking ribby. Right? Stays in the top 1/3. Happens on one side. Happens on the other side. All the way up. Gives you topping tail flag saying, psh, waving a flag at you saying, get out, get out. Right? Exhausted area. That run is done. Here's Chewy's. Right? Here's your Fab 4. Kind of stays in the trap zone, right? Not much happening, but it gives you 3 bottom end tails. And then it has follow through. It breaks through the 200. And has a nice bull bar. Then you get your ribby. Stays in the top 1/3. See how it looks like a nice ribby right in the top 1/3. And has follow through. Right? Now this one would have been nice because what happens on this side happens on this side, but this leg is extended. It really went further up. So this would have been a lot more profitable. Could have got a buck off this one. If you got in at 69, you're a little late. You ride up and you get out at 70, 70, 50, dollar 50 on this leg right here. That is a home run. That would have been a great trade. Pulls back to the 20, continues on its merry way. Starts riding the 8 train, right? Here's a bull 180, riding the 8 train, pull back, top and tail, bottom and tail, riding the 8 train, continues, pull back to the 20, keeps going higher and higher. Chewy's is doing good today. Up 6.77%, 4.5, 459. Nice. There's Nero, a Chinese electric car company. So there's your Fab 4. It breaks down. You think this is a short, but it hits bottom. It bounces back up right into the trap zone. Gives you this ribby. Keeps going up. Pulls back all the way to 20 moving average. The initial opening. Right through the 200 moving average. Pulls back again. Keeps going. Here you have a ribby, ribbies. All right, so you have multiple ribbies up this 8 train here. This would have been a nice, showing you power up the 8 train. Nice trade to get in here somewhere, right? Either this ribby or that ribby you got in, put your stop, let it ride. Nice. Starts giving you topping tails, pulls back to the 20, pushes harder up. A few little topping tails, little wicks, right? Pulls at a 20, keeps going up. So Nero was up today, almost $2. So upstart holding, has your Fab 4, it goes up, rolls over all these top and tails, gives you a nice givey right here. Right? So you get in here, or you stop and let it rip down. This little leg, say if you got in here, it could have been like $55 all the way down to 50. This is a $5 leg, incredible. That would have been an incredible home run play right in here. Right? Just this little leg right in here. You don't have to get the whole trend or look for grand slams. This is a home run for me. $5 on one. That's very good. Even if you got $2 or $3 of it, you're still profitable, and great profits, nice, great play, man. And then it rolls over here and gives you all these gibbies. Gibby, straight down hard. See that? Upstart Holdings. We have here. Already up there, but kind of developing right now. It's Ribby, right? So you stop, enter, and see what happens. If it rolls over, you're out. You know? It's happening right in front of our eyes right now. Here's a nice Ribby right in here. Right? There's a bull elephant bar. Ribby continues on. Stays in the top 1/3. Happens on one side, happens on the other side. And it kind of rolls over. This tail, you would have got out. A bull 180 on the 20, so it's not very good. Goes back down. So basically, those are examples of ones that happened today. There's Norwegian or Ribbies. See how fast you can spot them? See how fast? So, okay, I think I gotta go. They're telling me thank you. I'm saying thank you. Jan, are you there?
Okay,
Or did you
so let's
guys-
wrap up.
Okay,
Thank you, Tony. Thank you, Tyler. Thank you, Paula, for translating.
thank you.
And we'll be back at this on Wednesday at noon, 12 New York time. Okay? See you all there.